I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, good morning and good day, and here we are.
Well, the Republicans and Democrats have wrapped up their conventions. We know who their nominees for vice president and president will be. How do you think this is going to shake out economically, depending on who wins?
Well, it's an intense struggle going on between those who want to do things coercively, authoritarian, where the state knows all and does all, and that trend has been on for 100 years, and those who are beginning to see through all of the wonders of government. And we actually have an example in the late 80s where in the police states in Eastern Europe, which did have the privilege of state murder, the ordinary person kept looking at the governing classes, looked at the promises of how wonderful communism was, and then looked at the results. And they also looked at how well the apparatchiks and nomenclature were living and said, hey, so it was a popular uprising. And they faced the threat of the government sending in tanks and AK-47s and that stuff, so it was really quite a risk they took on. But they stared down the police state and reduced it. Under Putin, for example, is kind of a counter-reformation where he isn't trying to bring back the old Soviet Union. But the irony is that under the Obama administration, the U.S. has become the most authoritarian government in its long history. And you're getting a certain restlessness because as the state has expanded and intruded into the economy, productivity's gone down, and you haven't had, for the average wage earner who is working, there's been very little advance in real take-home pay in 20 years. And one then wonders, where is the money going? Well, of course, it's going into the hands of governments and big bureaucracies and ministries, and all of which is rather unproductive and wasteful. But their success depends on presenting a story that I can take the money away from the bad people and give it to good people, and if they can keep enough of the good people happy and voting for them, then the experiment in authoritarian government continues. But there have been times way back in history when just ordinary folks look at the deal and say, this isn't working for us, and let's call it a popular uprising. And in recent times, the last popular uprising ended up taking down the Berlin Wall. And the irony is that with the Obama administration, they have been busy, very busy, building through legislation the equivalent of the Berlin Wall in the United States. And the folks are getting upset about it. Now, I think that this popular movement will continue. things are not changing. It is the same thing. The state is ripping off huge amounts of money, and the guys at the ordinary person is not getting as much as, he's not getting his due, and he knows it. So anyways, this could continue through into the election. We've even seen that with Hillary's speech last night. Parts of it, you'd think she was almost a Republican. It was middle-of-the-road stuff, and then you remember that on the first election, Bill Clinton won. He ran, they were called New Democrats then, and they ran middle of the road to win, and they then, in order to win, they ran middle of the road, and then when they got into office, they governed left. And this is the same thing right now. Hillary did the shift to the middle in order to be more palatable, and then win and then govern left. And that then would be a serious move here, because the Democrats have been shown to employ the agencies of government to win elections, and to also throttle any opposition. They were using the tax people, the IRS, to investigate conservative people. And so it's an important election whereby elections after this one, if the Democrats win, the elections may not be as free as they have been. You will have virtually every agency of government working against the ordinary person. I mean, even the business about climate change is a massive intrusion based on some fantasies. Well, not a fantasy. It's an audacity beyond imagination that a committee, the government, and huge amounts of tax money and huge amounts of regulation can regulate the temperature of the planet. I mean, first of all, the audacity is that they can arbitrarily choose a level of temperature that's ideal for the planet. I mean, it's breathtaking. And then the assumption is that they can do it with enough taxes. So it's probably the biggest scam in history, and way beyond the scam that they can manage the economy. Actually, Jim, this gets around to an intrigue here, is that the economists and central bankers are saying that if they can't get inflation above 2% annually, something bad will happen. I don't know how they picked this 2%. But anyways, and then you've got the climate warmer people saying that if the climate or the temperature gets 2 degrees Celsius above an arbitrary level back in pre-industrial times, that something awful is going to happen. I mean, do they talk to each other? I don't know, but these are very arbitrary decisions. And you also have on the central banking side, they chose Keynesian economics, which is an intrusive economics, but the only reason why they chose it is because it lends power and authority to government. And the same thing, there is a practical theory of climate change. And by the way, I did do a degree in geophysics, and glacials and interglacials are a part of the study of geophysics, and it's well understood that it's periodic and based upon variations in the solar system. So, but these guys that go ahead and choose a model or an understanding of climate change that serves the state. So they get all kinds of money and power and authority by pushing an impractical theory of climate change and denying the real climate change. So this election coming up in the U.S. is a massive struggle between those who are compelled to intrude on people's lives and those who are finally waking up and saying, hey, I don't like these. It's in your wallet and in your face government, and people are beginning to say no. And but let's go back to the stock market.
We'll have more with Bob Hoye right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Bob Hoye. Bob, how are the stock markets doing, and what's their historical relationship to the U.S. election cycle?
Oh yeah, there's some guys who specialize in the election cycle, and I think it can provide some guidance, but I think you're just better off to go from overbought to oversold readings on the technical side, plus a little other history. And what we're seeing now is that you've had quite a correction in crude oil going on, down. It was extremely oversold in January at 26, jumped to 51, overbought. Now it's down to a bit low, the 41 level, and getting a little oversold. And also we've had a model that would call for a low in crude oil around now. I mean, pretty close. So we think we can get a little stability in crude oil here. It's moving up. It'll help the general stock market. You've got a terrific narrowing of credit spreads going on, and as you know, that's one of our bellwethers on that one, where with the disaster at the opening of the year in the financial markets in January, there was quite a panic in low-grade bond yields going up and spreads widening. It got up to 20%, and then now it's down into kind of like 13. There's terrific narrowing, and this technically on the narrowing of credit spreads is now getting almost, let's call it oversold, almost, and at close to a support level. So any change in there with spreads widening would be upsetting, because it would, the last time you had this kind of a reversal, or where it did actually made the reversal, was in August and last year, and then the markets took a big hit. So a lot depends on the credit markets. We've got spreads been the party. You've also had in Europe, the European Central Bank has been buying the hell out of corporate bonds there, which is not a big market. So that has probably helped things as well. So anyways, we're watching the credit spreads. We're watching the yield curve, which is the difference between, like in treasuries, short rates and long rates. And the curve is changing a little, but not enough. Well, it's enough to say an alert. And the credit spreads they're still very positive. But with the crude oil, if it bottoms, like say next week, it could have a rally. That would help out other commodities, and it would help out the stock market. A few days ago, the dollar index got above the 200-day moving average, which was positive, but in the last couple of days it's gone below. So it looks like we're going to have a favorable August in the financial markets. And then we want to look ahead and remember last year's seasonal decline in crude oil, which got very, very bad from October down into January. And if you look at the chart, that's often a seasonal move. And but let's be positive for August. And this rising crude price will be helpful for the precious metals. You can see that silver looks like it wants to do another rally, and so that sector will be good. So hey, look at it. I've talked myself into being positive for August. How's about that?
Well, Bob, it is nice to see you positive. Getting back to the U.S. job scene, yes, positive job numbers, but surveys show 90% of those jobs are people 55 and older picking up minimum wage jobs to top off their pensions. Is that really the kind of? Is that really the kind of
sad item, that one? And then on their job situation, which is a very cynical reporting, where they've been able to screw around with the percent unemployed, and they're down to something like 5% unemployment, and all the economists and politicians say this is really good, but there's something like 50 million people have dropped off of the labor force. They've given up looking, so then they don't include that in the calculation. Who knows, it might have been up to 15% unemployment, but when you jack around with the numbers, which is what governments will always do, by the way. I mean, I've been on the street and bond trading desk for a long time, and you know that the governments, when they get ambitious, they will do anything to make a picture look good. So, but let's have a happy time this for the balance of the summer.
Well, something too in BC with the 15% tax on real estate bought by foreign nationals in the Greater Vancouver area. A recent survey has just found that 90% of Vancouver residents feel that's a good move. But is it too late?
Yeah, politically it's very good for the provincial government, but the problem of speculation in residential and other is that again, you go back to the central banks. They have a theory that if they inject credit into the economy, that you'll get business growth out of it. But that has been a correlation, not causation. And so they're doing the wrong thing. So then, on the other hand, you've had for decades now federal and lesser jurisdiction governments putting in all kinds of rules and regulations on the economy so that you have a constraint on economic growth. Then you have the guys over at the central banks taking a look, oh, it's not growing enough, we're going to give it lots of credit. Well, if you force credit into the market, it doesn't go direct to business expansion. The public chooses where to put the excess credit, and that excess credit has gone into speculation in residential real estate, speculation in some of the big financial centers, in office and all that sort of stuff. But if you take a look around the world on an index of house prices in Hong Kong, peaked in August a year ago and down. An index last looked at a month ago for residential real estate in, I don't know, the top 10 cities in China, still going up. But residential high-end stuff in London is all of a sudden found that there's oversupply and not enough bidders. So it's a weakening market, and that's the same for Manhattan as well. Suddenly a weakening market. You've got art, the big art sales. That seems to have maxed out, and like Christie's are not doing as much on the art auctions as they've done. And even though I'm in a car nut from a way back, and my Ferrari buddy friend yesterday was telling me that the latest auctions have been a little disappointing. And then, of course, you've got in August the Pebble Beach huge concours show and historic sports car races, plus auctions. So we'll be watching that auction, too, to see if the high-end or the mania for positioning high-end assets is stalling out.
Bob, well, then, in other words, this tax sounds like a great idea, but Ross Kay, our real estate consultant who we always talk to, said, look, prices in Greater Vancouver were already starting to drop. So this tax probably wasn't needed.
Right. It was like decades ago in England, they had a lengthy drought. So they appointed a minister of drought, and the rains came. So this one, it shows an extreme in the market, and it's interesting that your real estate guy is saying that the prices have stalled out, and that makes sense to me. So, because in previous highs, speculative highs for real estate in Vancouver, 1980, very close to the high-end commodity prices. Even way back, I think 74, that high was very close to the high-end commodity prices. Because I remember an institutional salesman on the street at the time, he said, he went around and said, Friday at 11:30 a.m. today, which was a Friday, he said the Vancouver real estate has peaked. But, that was just an aside, an amusement. But it did peak in 74 and 80 with an important high in commodities. This one, commodities have been all over the place for the last couple of years, not that strong. So you couldn't tie it to that, but it looks like it's just following the action in Hong Kong, London, and New York.
Well, Hong Kong apparently and Sydney put taxes on foreign buyers. That could have been a factor in them coming down.
Could be.
And Bob, as we wrap up our podcast, we also have some questions. Our good friend Bert Winkenbach has a question. In the past, the New York Stock Exchange margin debt and the S&P 500 were copies of each other. More margin debt meant higher share prices. Now the margin debt is decreasing, but the S&P is still rising. So the invested money is coming from a different source. Is this another sign that the central banks of the world are propping up the stock markets, or is it capital starting to flee from Europe? What is your guess? Well, it won't be a guess, Bob. You're an expert.
Well, I don't know. On this one, it's guessing because actually Bert's got a good question there. You've got through a number of stock market cycles where margin debt expands as the prices go up. Everybody's enthusiastic. Let's get leveraged. And then it gets tired and margin debt goes down. But sometimes the stock market can keep going up for a bit. And then on the second expansion of margin, and it may only last a couple of months, and then it tips over, and that's usually at the high for the stock market. And then both, as Bert says, both go down together. Now, we've got an anomaly here over the last couple of months. Margin debt is still down ticking, but on the S&P, you're setting new highs. So I would guess that, and we know that central bankers are buying equities now. They figure that if they can get asset inflation in anything, it'll then eventually push into the economy, but that's not going to happen. So the only explanation would be central bankers buying the most liquid stocks in the U.S., which are the big ones in the S&P 500. So good question.
And also, Bob, our buddy Frank de Beer in Belgium has a question about the Italian banks, about their non-performing loans versus equity ratios, their exposure to French and German banks, and he's getting very scared about the banks. Should he be?
Should he be? Yeah. Well, one of the big banks there, Dresden Bank, is Deutsche Bank, was very active in all kinds of leverage stuff and ETFs and things, and it's been in a severe decline. And then with the Brexit announcement, on one day it fell 20%. And then as he mentions, the Italian banks too. Now it's well known that they're over leveraged and probably got a lot of bad loans on the books. So yes, this is a serious problem, and we're in a positive thing since all the pressures, and it looks like Brexit kind of cleared out a whole lot of bearish opinions, and then you've had a natural rebound reinforced by central banks buying stuff. So it comes back to what would we use to say, give a warning on the turn. And again, we come back to let's watch the U.S. yield curve and the U.S. credit spreads, and that should turn it. But in previous severe contractions, like in 1931, everybody thought the worst of the crash was over, everything's great. And then you had the big bank in Austria, Credit Anstalt, suddenly discovered that they were illiquid, default. But during the interim, when the stock market had recovered after the first crash, the government in Austria had forced Credit Anstalt to take over some failing smaller banks, which makes their burden worse. So who knows what's going on now in detail in Europe, but they've been probably propping up everything they can. And virtually every day I take a look at the Italian interest rates to see when that might be happening, and everything's fine at the moment. But the problem is there, and it's a good question.
Bob, Frank is also worried about how safe his money is in European banks. He's wondering, should he get that money out now?
Very difficult, and for me, and for those of us who live in Canada that have a relatively sound banking system, to consider, what do you do with your deposits? Well, it's the classic insurance program, taken by some gold coins or bars or whatever, and put them in a safe place where, I mean, not just safe from your run-of-the-mill robber, but also from state robbers, like a safety deposit box in an institution may not be safe from ambitious government. So, hey, am I talking about putting them under the mattress? Possibly. But you have to look after yourself. And you can't abide by the standards of the day and what the other guys are doing. Yes, I think one should be putting money aside in a very safe place, and that the best way to save money is in gold. So,
Bob, thank you so much for chatting with us.
Well, we got her done.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HoweStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. And as you've heard, when you email us, we answer your questions. You can email us at info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.